Hey folks, it's Simon here with your Tao Daily video for Tuesday the 7th of May 2024. On yesterday's video I talked about how all of the major indices were stuck at their 50-day moving average, and how kind of today's move or this week's move would help determine whether this gap here was an exhaustion gap or a breakaway gap. And given that we gapped higher and kept on going today, this is starting to look like a breakaway gap. And prices reclaim the 50-day moving average. All right, so I've got to give the bulls the benefit of the doubt here. Now, if we look on the NASDAQ, same sort of commentary applies. All right, we've reclaimed this support level, became resistance. We're now back above it. We're back above the 50-day. If we look at IWM, back above the 50-day, prices above all of the moving averages, and same for the Dow, although the Dow is kind of bringing up the rear here, but still price is above the 50, it's above all of the key moving averages. So the bulls look like they've got the upper hand here. And if we run some Fibonacci retracement levels, it just kind of gives us a bit of a roadmap as well. You can see that on SPY, we've cleared the important 61.8% retracement level. 8.6, you know, that is a valid fib level, but it tends to be a much weaker level of support or resistance for stocks than it does for FX. But, you know, we've got momentum bars have gone from red back to green. We've cleared the 61.8. It actually looks like SPY could make new all-time highs here, or at least challenge the previous high. So does that mean we just rush out and buy everything with our ears pinned back? Well, no, I don't think so, at least not at this point, because we don't have clear trend. All right, what I mean by that is the moving averages here are all kind of congested around each other. Price action is still promising, although we can't yet rule out the possibility of a bear flag here, but we don't have clear trend. All right, and what I mean by that is we don't have what I call rainbow logic, which is when we've got the red above the orange, above the yellow, above the green, above the indigo, above the violet. All right, when you've got that, you know you've got a clean trend. We're still in a chop zone, all right? Yeah, I give the edge to the bulls, but we're still in a chop zone, and the same can be said for all of the major indices. And in fact, the same can be said for all of the major sectors as well. There are very few sectors in a clear trend. The utility sector is about the only one that is showing this rainbow logic that I like to look for. So it doesn't mean you can't trade this market, but what it does mean is that if you're taking long positions, and I think you probably want to be biased long in this environment, maintain limited expectations of where the trades may go. Because in a choppy environment, moves tend to have limited follow-through. So the way I'm approaching this market is to tighten my stops, moderate my profit expectations, trading with a bias towards being long, and really just keeping risk levels small until clearer trends emerge. That's what I got for you. I hope it helps. I'll catch you tomorrow.